Good afternoon and welcome to the Elite Funds Maximiser session for January 2015. This is the monthly update for the forthcoming month of January. The agenda for today, the month in review, will be having a look at the previous ETFs that are part of the Elite Funds Maximiser, looking at the ETFs for this month of January as well. Importantly, our disclaimer: the content of this presentation or any other Elite Wealth material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So, as always, before making an investing decision based on the general advice presented in any of our presentations, please consider whether that advice is appropriate in light of your financial circumstances. Well, the month in review. December, the two main ETFs that we had part of the Elite Funds Maximiser were QQQ, which is the ETF that represents the NASDAQ index. The other 50% of the portfolio was allocated to SPY, which basically is an ETF which replicates the performance of the S&P 500. You'll see the performance of the QQQ, the Power Shares NASDAQ. You'll see there from the last couple of months that we've been in this particular ETF that the performance is really gone sideways along with the rest of the market. From November through to the end of December, QQQ, the NASDAQ index, down slightly with some of the bigger stocks in that index just coming off a little bit during those last couple of months. Having a look at the performance of the index over the last month, more specifically, it was down 2% over that last month. Again, the global markets really lost a little bit of ground during that particular month. When we compare it, however, with the performance of the Australian market, we did have a little bit of a rally on the local exchange, mainly due to the movement of the banks moving a little bit higher as part of a Santa Claus rally, if you like. Certainly going forward, the main focus is still going to be on the Fed. Obviously, we had the initial rate hike, if you like, back in December. There's certainly a little bit of volatility with that, and as a result, the US markets in particular experiencing a little bit of that volatility along the way. Other than that, the ETF really pretty subdued, really. During the December month, not really getting too much of the Santa Claus rally that you sometimes do get in December, but nevertheless, the remaining fairly flat over the course of that particular month. So whilst it was pretty much on par with the broader US market performance, it did underperform the US market, which is the benchmark that we use for this particular portfolio. And again, just because of the improvements by the banks just in that last half of the month in particular. There's the SPY, the ETF that represents the S&P 500, and you'll see there a little bit similar to QQQ, in that the market has just sort of tailed off over the last couple of months, just trying to get back to those previous highs there. Obviously, a bit of concern about as with the QQQ, what was going to happen with the Fed and interest rates. Now that announcement's out of the way, yet to see what's going to happen for the next particular month. But certainly in terms of relative strength and momentum, these two ETFs continue to hold up by and large pretty well. So in terms of performance, very similar to QQQ. Fell slightly for the month of December. Again, in line with global performance, but just underperforming our local market. Certainly for a period of time, the US markets have certainly outperformed the Australian market. And in fact, the US market has outperformed the Australian market for pretty much the entire year. But again, we've just got those volatility issues, generally around the Fed rate hike. So if we have a look at the performance between the benchmark and the EFM, that's the Elite Funds Maximiser portfolio. For the month, it was down 2%. You'll see there that QQQ was down 2, SPY was down 2.1. The average of those two coming in at minus 2%. The benchmark, the Australian market there, just having a little bit of a year-end rally. We look at the All Ords Accumulation Index, so not the ASX 200, but the All Ords Accumulation Index, and that as a result of dividends, etc. along the way. And a little bit of a Santa Claus rally, not overly significant, but outperforming for that particular month. So you can see there, benchmark up 2.6 versus the portfolio down around about 2%. You can see the outperformance for that particular month of December. Now, January, the ETFs are exactly the same. So there's been no change to the portfolio. So we are still 50% invested in NASDAQ 100. That's QQQ, the ETF, and 50% invested in SPY. That's the Spider S&P 500. So no change to the EFM for the month of January. So just a quick recap. Holding those into the new year certainly give large exposure to the US stock market, both the top biggest ETFs in the world. US shares at the moment closing close to their record highs, so certainly signs of a fairly strong economy over there at this particular point in time. The only thing that's going to be an issue as the economy starts to grow is the impact of the Fed and whether they choose to increase rates on a steady basis or whether there's going to be some delay in the timing of those. But still, those two ETFs are experiencing good momentum, good relative strength, and therefore, in terms of ranking, etc., they're the top two for the list for this particular month. So no actions required. Continue to hold QQQ and SPY for the remainder of the month of January. Well, that concludes the Elite Funds Maximiser recap for the end of December, beginning of January. Thank you for watching.